Good evening, everybody. At least the weather is good. I say that because this market sure is lousy, sideways. So we can see the Dow is sideways. The S&P 500 is basically sideways. The strength is right now over in the NASDAQ. Slow uptrend. But as we can see, it's been using the T-line as a support, which gives us that much more confidence that the uptrend's in progress. However, the stochastics are running out of steam. So there's a lot of, I think this is it. This is the transportation index. So it's not showing any resiliency either. Gold. Not going anywhere. Silver. Is that silver? SI810. Yeah, I didn't see that it took a big dump like that. Let's see, we did gold, silver. The dollar's trying to come up a little bit. The grains, as you can see, soybeans is in a bearish J-hook pattern. And wheat came up big time today. It must have been a crop report on Friday that kind of swung these markets around. Trying to think of what else we get. Oh, crude oil. Crude oil, I guess there was an announcement today that they're going to put how many millions of gallons back into the strategic oil reserve. So that's at least basing the crude oil in this area. Okay, so with that, notice how big that reversal signal was. Your long-legged doji, right about the same level that it bottomed out before. So these are the type of things that you kind of want to gain confidence on. However, notice once it got up to the T-line, it was failure. But this now makes for a potentially good trade. But if they bring it back up through the T-line, this is kind of a secondary, what do I want to say, secondary signal patterns that we're going to be going over on Saturday. That this may not have been a trade that you could have, well, you could have gotten into, but you had to get it back out. However, if this starts coming back up through the T-line the second time after that signal, that gives you that much more confidence or that much more indication the bulls are taking control. So that's been working on patterns like this. You can see when we recommended Aspen today, it was based upon this fry pan bottom, J-hook pattern. You can get ready to buy this one on positive trading with the expectation that if they came up through the 50 and came back and basically tested the 50 and started back up using the T-line as support, this becomes a high probability trade setup. Now, for most people, this doesn't look apparent. But if you know what the fry pan bottom classic pattern is and how it's supporting right on the T line and the pattern setup, that makes this a high probability trade expectation. You see that also over here on YMAB. There's your fry pan bottom breakout. There's your J-hook pattern. So even if you didn't buy in here, this little setup says that this is a high probability. They're going up to the next wave to the upside. SLI, same scenario. We can see much more clearly John, the question is, when you get a chance, could you talk about the importance of the stock fundamentals as we begin thinking about trading a stock long? And John, it's a very simple analysis. The fundamentals have absolutely nothing to do with the stock price. Remember what candlestick signals are. They're the graphic depiction of everybody buying and selling during a specific time frame. Has nothing to do with the fundamentals. It has everything to do with the perception of fundamentals. So this becomes a good trade setup. Where's the next likely target? Could be back up here to the 420 area. So I will go to this chart to point out that when this broke out, I don't know whether I can make this. I guess I can. When this broke out, the fundamentals of this company had absolutely nothing to do with price. Who was it? Travis? Travis caught a good portion of this. And after hours, it went from 23 to 71. And then from there, it went to 256. Nothing to do with fundamentals. So I will keep reiterating this. We are not trying to study what the fundamentals of a company are. We're trying to study what everybody else's decisions are about that stock price. Now, that stock price may have people buying because of fundamentals. There might be other people buying because of what I call Robinhood. What we're looking at is we don't care what the fundamentals are. I say we don't care. I mean, if they're terrible, but all we're doing is recognizing that somebody is buying this. We may not know what changes there are in the fundamentals. All we know is investor sentiment is buying or selling. So kind of that rhetorical statement, when a company comes out with great earnings and they sell it off like crazy. Well, those fundamentals were good, but what was the investor sentiment? Maybe they weren't good enough, or maybe they were buying on rumor, selling on news. So prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So here's another kind of, let's say, classic or can't think of the right word, but obvious use of candlestick signals. You can see the pattern setting up. You can see the double dojis. You can see how the T-line is acting as a support level. When you add all this up, what you're basically doing is putting yourself in situations where the probabilities are greatly in your favor. So this is what we want to learn, how to expect what to do. I guess lathering statement. We want to learn what should be the results of signals and patterns that we can recognize. You can see how they started or doing a little scoop pattern. You can see where the resistance level was right in here. You can see they broke out through the moving averages, and then they gapped it up. In this case, it was on very good earnings. So a lot of people say, well, should we be selling? Well, the answer is we're still in a strong uptrend. Every single day is not going to be an up day. So what do we do to kind of protect ourselves? Well, we probably don't want to see it close back below the halfway point here. And we definitely don't want to see it trade back below this level. That would tell you the sellers are back in control. Until that point, the assumption is there should be in a 45-degree off of here. We had that same scenario over here. When they gap it up, we can watch to see what investor sentiment is doing at the levels that everybody else is watching. And that's what puts you in situations. So this kind of alleviates that fear factor of chasing a stock. If we were buying on positive trading in here, what was it kind of telling us? If they weren't trading it back below the 200. But just common sense tells us where would be a spot that tells us the bulls aren't in control anymore. Well, if they came back down through the open of that gap up day, that would tell us, oops, they aren't buying. They failed here at the 200. So everything we look at on a candlestick chart is just kind of common sense put into a graphic depiction. We're trying to take the guesswork out of what trades to get in and what trades to get right back out if they don't work. For example, hold on, I'm trying to think of which one. Oh, MRSN. Look what this one was doing during the day. It looked like after this big price move, we took some profits in here. And then today it was starting back up. Looks like a J-hook pattern. But at the end of the day, it closed down here. So now we at least have a game plan. It has to open positive and trade positive to stay in it. If it opens lower, what's it telling us? We're up here in the overbought area with a doji, then a bearish engulfing. If it opens lower, it's not doing what we expected. We'll come right back out of that trade. Okay, so here's what you want to get stuck in. Trades that stay above the T-line. And the reason I point this out is because there's been so many times before the T-line came along that I would get out because I was smart and I'd get back in if it turns back up. But usually I've taken that money and gone on to something else. Now, at least if I've got 10 positions on, if you've got one that's staying up above the T-line, you just stay long. That takes that, what do I say, the emotional factor out of your trading. Same scenario here. Now, that's a bad hair day. But what should you do when you see a big move like this? You wait to the end of the day. In this case, we saw that it closed back up above the T-line. What was our final criteria? You stay long until you see a sell signal and a close below the T-line. The reason is that type of analysis has saved my butt many times. Now, it kind of gets you where there's days where you're kind of afraid, or sitting here and with anxiety. But I've learned that if you just stay calmly in a position until it does everything that we know is the right criteria, which is basically you stay long until you see a sell signal and close below the T line. Same scenario on FTNT. This is one of the things that we are going to be emphasizing on Saturday. This is not only a big reversal signal, and there's your left-right combo Morningstar type signal, but the fact that it is a huge big move and a candlestick reversal signal gives you that much more probability that you're going to be heading in an uptrend. Now, do you want to chase it after this? If you're buying the stock, yeah, no problem. If you're buying calls, maybe you're doing a call spread, anticipating a 45-degree, but not going at it full guns with just buying calls. So things like no knocks, nice strong uptrend. A breakout. Oh, why did I point to this one? I have no idea. But there's your fry pan bottom breakout. Look how it's supporting at the T line, or I'm sorry, at the 200, and use the T line as support. So what is the probability factor of this setup? Well, from what we know, fry pan bottom breakout, J hook pattern supporting right at the moving averages that we're watching. This starts trading positive. That's doing exactly what we expect coming out of a fry pan bottom. So the whole point of using these graphics of the signals and patterns is putting yourself into positions where they're buying for whatever reason. We may not know the reason. All we know is they're buying. Now, the worst case scenario is, looks like it's trading up tomorrow. Might go back and see what news there has been on this one recently. And you can do that with every stock that you check to see what the news was that created that strong price move. So this is what we want to get everybody's eyes acclimated to. Look at how junky this trading was, so indecisive. And then they gapped it up out of that range. What do we know this pattern as? Pretty much your cradle pattern. And what do we expect coming out of a cradle pattern? Usually a very strong price move. So are we always going to be able to find something like this? No, but you're putting yourself in positions where the probabilities of being in something like this are much greater in your favor. But what we're really looking for is the positions that if we recognize the pattern, like in I, we want to know what to do with it once it's moving. And in this case, you don't do anything with it. I always illustrate the fact that if I'm in 10 positions and I've got one that's doing this, it only takes a matter of 3 seconds each day to say, well, still above the T line, still above the T line. And I can go on to something that might need more analysis. That's what we did, MRSN. On the downside, this is the advantage we have knowing what the strength of specific signals are. So look what Expo has done ever since it did that bearish kicker, trend kicker signal. Well, we know the market's been pretty much flat, but you can see the force of that working to the downside. Wolf, there was your bearish best friend. Now, what should we be learning, or what should we be looking for? Well, all of a sudden, here in the last 1, 2, 3, 4, 5, 6, 7 days, in the oversold area, it's gone flat. So what would you have done with it today if you were short? You would have closed out the position, because what have the probabilities basically told you? This is where they're buying. Let's take our profits and go on to something else. See. Kind of the same thing with IPI. There's your bearish best friend with hard selling. Well, now looks like we're in the oversold area. It wasn't a reversal signal, so at least we have a game plan. If it's not a reversal signal, but you've got the conditions where it's in the oversold area, there might be buying, makes it very simple. If you're short and it opens lower and trades lower, you stay short. If it opens positive, you close out the position, because more than likely they're going to bounce it up to the T line. Now, if you are like me for many years, I'm thinking, oh man, should I get out? It's still below the T line. It could go lower. Instead of saying, is this the best place to be short anymore if it opens positive? Let's go close that out. No, it wouldn't be a reversal. It's not a signal. Just because it gaps up doesn't mean anything. It tells you if you were short, get out of it. It tells you not to even look at it until you get up above the T line. Now remember, prices that gap up are few and far between. Not few and far between. Not real common. So I'm looking at the same thing on being short Tyson Foods, because there's your bearish kicker signal, bad earnings. It's trying to move up, but notice that this was not a signal. How do I get rid of that thing? Just make notice what it did today. Traded up a little bit, but indecisively. What is the assumption of this price move? Price still heading down. However, if this opens positive, let's say the market opens positive, and this opens positive, now what can we assume? It's probably coming back up here to test the T line. So we'll cover those puts and then see what it does once it gets back up to the T line. FYBR. So there's your bearish flutter kicker with a good gap down below the support level. Insiders are buying. All right. Doesn't usually mean a whole heck of a lot. FYBR, some assumption could be that we're still in a downtrend. There's really not a whole heck of a lot of buying. The green line is the 3T line, 3 exponential moving average. So the logic is, if we know that the further away you move from the T line, the higher the probability is going to come back up and test it. That's where the 3T line, which is the 3 exponential moving average, becomes a little bit more revealing as far as what's going on in investor sentiment. It acts like an additional confirmation. So Airbnb came out with very bad, or I guess they had good earnings, but very bad prospect for the future. Now we're going to be going through different signals and patterns that aren't the common ones, like the flip to Carvana, like the bullish message. So the reason we're pointing out some of these is that they have high probability expected results. But a lot of people have a hard time trying to remember all of them. So when we go through Saturday's session, it's going to be showing you little tidbits of things to look forward to or look for, like double dojis, the trajectory, or, Carvana, the message. What would be the best strategy for that trade? Same thing on Airbnb. Well, pshaw. Airbnb. This is kind of your bearish message. Opened, came up, and then started selling it off over the next couple of days. So little tidbits like this. Where would be a good place to have shorted this? As soon as it came down through this level, I was telling you, they weren't buying. They were still selling. Right here. There it is. Whoops, I don't know if that's the right one. No, that's not the right one. I have goofed up. It's this one. Now we're going to have a lot of the triple T significance and that's kind of what we're going to be focusing around is the T line. But what I want to go into is the observations I've made over the years that when you see something like this, know what to expect on the next or what to expect on that next price move. When you see something like this, knowing what to expect on the next price move. Same scenario here. Now, the one thing that I always try to illustrate is that these have high probability expected results. But remember the term probability. If we had bought puts here and it was doing this, what was it telling us about our probabilities? They weren't very good. But today, if we had bought puts here, we would have closed them out. Where would we repurchase puts or a put spread? Probably back down through here. If they came back down through this level, now what can we analyze or visually recognize as a pattern? Your bearish J-hook pattern. And what would convince us that that was going to work? Because of that magnitude of that sell signal. So here's what we call observe the obvious. Selling right here at the moving averages. They bounce it back up. And look what happened when it came right back up. How did that little thing get back there? Or am I just the one seeing it? Is that box popping up over here? Yes, it is. That's aggravating. But there's your bearish message. Popped it up. Where is a very safe entry? Right there. Or if you're aggressive, right there, the halfway point of that candle. Because what did that tell us about the pop back up? That was just quick short covering. Now that downtrend will continue. So we are also going to be going through kind of 5 indicators that tell you what your overall market trend is doing. One of them is, what are the biggies doing? That's why we go through those every night. Now, NVIDIA is working well. Amazon, and Apple, nothing real spectacular there. Now, the reason I point these out is if there is investor confidence throughout the market, what do you think they're going to be doing with the biggies that everybody's trading? They're going to tell you which direction they're moving. And when they're not moving in any great direction, that's pretty much kind of a indication that the overall investor sentiment is pretty lethargic. So as you can see, even though NVIDIA is up strong, the rest of them are relatively flat. And Google, which has been acting well, that's not a good sign. Meaning, what were we expecting? A 45-degree off of here. So what would be our trading strategy if you were long Google that when it broke out? Well, you don't want to see it trade back below this level. That would tell you you could buy Google if you wanted to, yes. You'd be buying it based upon you expect a 45-degree off of here. However, if it opens lower, starts trading back below that level, it's probably telling you, yep, there's not a lot of strength there. They're probably coming back down to test the T-line. Now, what do you do with charts that look like this? Well, you go back and use our RARE process, which is research analysis, reverse engineering, meaning we've got a good, strong buy signal. Now we want to find out why that was a good, strong buy signal. Well, they came out with, I forget what it was. I think they must have gotten a good report on a phase 3 study, which now puts them in a position where somebody big like Johnson & Johnson or Abbott Labs or somebody like that could come in and buy them out, because that saves those companies tons of research dollars to know they have a good product. So it's more economical for them just to buy out this company, or any biotech company that's come up with a product that's going to be successful, which saved them tons of research. So what do we do with this? This is what we're going to be going through on Saturday. We don't want to see it open here and trade down here. If it opens positive, what can we expect? It's going to be a good, steady uptrend. I have a few here just to... You can see the fry pan bottom. You can see where the breakout level is. You can see today it did kind of a trend kicker. Now I say kind of a trend kicker because they still had some tail to the downside. The true kicker is they open it and go the opposite direction. However, that's still a decently strong signal. So if you were going to buy this one, where would be the best place to buy it? They've got enough strength to come up through that level, telling you wave 3 is now in progress. So I point this out because a lot of people say, well, shoot, couldn't we buy here, anticipating that it's going to go up through so we don't lose out on some of that profitability? I would rather buy up when it told us they are breaking out and make less money, but have the probabilities of making money that much stronger. And surge, I'm going to keep this. Why is this such a strong chart? You can see the fry pan bottom, and then you can see the little trend kicker signal that told you there's a new strong force in this. So these are the type of things that we want to get everybody more acclimated to as identifying that they're not afraid to be buying on a day like this. Let's make this bigger. Because you've got this, and you've got a trend kicker signal. That trend kicker signal is a very high probability trade setup. And I don't know whether, I know a lot of traders don't put enough emphasis on it because they don't know what the trend kicker signal is. There's kind of your J hook ready to break out. So there's your fry pan bottom. And again, this is what we call observe the obvious. Look what happened right here on this level. That's where you observe that everybody else is making their decisions, and we can see based upon the signals down here that it's indecisive. The stochastic's in the oversold area, and then you gap it up above the T line. That's just a high probability trade setup. Same scenario. So where is the breakout level of this one? Right about in here. And so this is that, what we call the, I guess the J hook plus. When they come up through a resistance level and then fail and pull right back to the resistance level to see if it's going to act as support, that becomes an extremely high trade setup or probability trade setup because everybody and their brother is watching to see what's happening here. We've got a little bit better view of what type of pattern is setting up. There's your classic pattern. That is. Once again, once you get above on a pattern breakout, assume everybody, remember, what most people are taught, that you want to be buying if it's above the 50, which has absolutely nothing to do with what the price move is. But if it's a price move that's being confirmed by that advocacy of buying if it's above the 50, that makes it for a very strong upside potential. So if they, whoops, it was even better now. That's why I had this one. If they have the T-line crunch, reporting right here at the 50, and they go through, where do you think everybody's watching for the next target? Up here. So there's going to be times, especially in a market like this, where everything is just absolutely sideways. I'm going to go to this is the futures, but you can see which way this market has been going. Nowhere. So what do we have an advantage of? We have an advantage that we can recognize which pattern setups, which signals in that pattern give us much higher probabilities of being in something that's moving profitably, even though the whole market in general is not moving. There's your bearish gap down. Remember what our trading rule is. You can stay long until you see a sell signal and a close below the T line. Now, you can see they're selling this one off pretty hard. Where's the next feasible trend movement? Well, back to that support level or that resistance level. This is the type of situation you want to get stuck in. If you want to take your emotions out of your trading, you start looking for the patterns that tell us when to buy. So a lot of people, I say a lot of people, yeah, a lot of people say, well, could we be buying here? And the answer is no. You're in an overbought condition. It's already had a good percent move. So you use this type of chart to say, all right, where should I have been buying? Well, there was one spot. There was another spot. So what this does is kind of trains, and I say trains you, trained me yet. Trained it, I was always looking to be well trained. It trained me to say, all right, I shouldn't be buying up here. I should have been buying here. I should be buying here. So what told me those are the places to be buying, or what should I have been looking for? Um, so instead of buying up here, I learned to go back and say, all right, where was the chart telling me it was time to buy? John, have no idea. Now, these are just rough statistical estimates. I know that probably 70% of my trades are going to be profitable. Now, obviously, in a market condition like this, that's harder to squeak out. But I also know that out of those 70%, some of those trades are going to be positive 0.3%. Going to be other trades that are 300%. But the most important factor of that 70% is 30% of the trades probably won't work. So once you realize that, if you get into a trade that's not working, get right back out of it. Because that also eliminates the emotional process of, oh man, and I did this many times myself, where I'd get into a trade and it didn't work. I'm thinking, oh man, that was a good signal. I should have been in it. But then I realized, well, it's not working because it came back down to this level. Now I forgot what I was saying because I read. Oh, when buying and selling long, may I ask what sort of profit percentage allows you to say good trade? You're not gonna know that, John. There are positions where that's a good trade, buying right in here. Then there's going to be other positions. Raymond, we bought some stock today, but if this opens lower tomorrow, we get right back out of it. It didn't work. It worked from this point up. So there, John, that's kind of a nebulous question. I'm usually apt to hold anywhere from 2 to 10 trading days. Now, obviously, in this type of market condition, we may not uh, be in a position very long at all. But that's the whole point of going after trades that have high probability, powerful trade setups. So when we initially initiated this trade, that was a trend kicker, high probability trade setup. Establishing this trade is a high probability trade setup. But I always stress the term probability. This is what we expect it to do. So sometimes you have to sit patiently waiting for it to work. But we know that if you see a bearish best friend, bearish message, that's likely the direction until you see something different. Do you think the debt ceiling will be raised? And if not, what should we do to protect our trading accounts? Ronald, I have no idea what, and you'll get me off on a tangent of that we've just got stupid people running our government, running our economy. So there's nothing we can do about it. All we can do is analyze what the market is telling us the results are going to be or likely to be. How do you determine the target when a stock breaks out and has an all-time high? You don't determine a target. What becomes your trading criteria? That's the one you were looking for, CRT. You just now have to use your other trend analysis. You stay long until you see a sell signal and a close below the T line. And HEI, well, yeah, there's no way to tell what that one's going to do. So you use your trend analysis. For your morph example, would you take your profits on May 19, expiry call options at the belt hold top, or continue to hold another 3 weeks? Boy. If you had bought calls in here, that would still have been a toughie, except one last criteria. Now, if you did take or close out the trade, which if you were in the calls and it was trading back below this level, not knowing that it was going to come back up, I would have closed out the trade. Maybe 3 or 4 days later, I would have gotten back into the trade when we saw evidence that it was going to be supporting at the T line. Should we expect a breakout up or down to happen quickly to be effective? Should we expect a breakout up or down to happen quickly to be effective? I don't know. Yes, so one of the things I have learned through the years is whenever you put a trade on, put a stop in at some place where it shouldn't trade. Now, 90% of the time, it's all right. What we want to protect from is that 10% of the time when prices all of a sudden go way against you. So that you're, 2 reasons you want to stop out of a bad trade. One, obviously, to get out of that bad trade, number one. Number two, so that mentally you're not sitting there saying, oh man, I should have gotten out where I should have stopped out. Now what do I do? And you spend the rest of the day trying to figure out what to do. Should we expect a break up or down to happen quickly to be effective, i.e. profitable trade? FC, I still don't understand. A breakout, as we saw on top, right there, showed there was something new going on. A breakout of a pattern tells us there's something new going on. I don't know if that answers your question. Let's see, I was looking for PCA and PCAM. And so here's why we want to know what a trend is telling us. Somebody was asking the other day, well, if it's waffling up and down above and below the T line, what's it tell us? How do we trade that? And the answer is you don't trade that. It's telling you it's not going anywhere. Go to some place where you can see an effective trade setup. Okay. So what I want to kind of demonstrate is on top of the 12 major signals and the candlestick patterns, which you all should be learning to recognize those, there are other things that start or that come into play that give you a better perception or perspective of what a trend reversal is doing and or whether a trend continuation is in progress. And so that's kind of going up the ladder a little bit to get to take those other elements, and if you have those in the back of your mind, now the 12 major signals and the patterns become a lot more effective. Okay, so is there any general questions on candlestick analysis? So you were trying to explain what you would do if you have a trend that is being displayed by MRTX, but got distracted. In my case, I will go to a 10-minute chart and see if people are buying and then buy. And if not, I wait to pull back to the T line and buy. Well, your 10-minute chart becomes more relevant when you're up here in the overbought area. Now, you're not that far away from the T line. However, you do have a shooting star. So if I saw this one backing off, and I was long, maybe I take off half the position and then see what it would do once it gets back to the T line. It becomes much more effective. Does a trend reversal always happen in the oversold area? Remember the simple philosophy of the Japanese rice traders. If you see a candlestick buy signal in the oversold area, the probabilities are pretty strong. You're starting to see a change of investor sentiment and getting ready for a buy setup. If you see a candlestick sell signal in the overbought area, the probabilities are pretty strong that it's going to go in that direction. Now, if you see a signal that looks like a signal somewhere in the midpoint of that trend, it doesn't have the same relevancy. Just because it's a signal formation doesn't mean it's a signal if it's not in the right conditions of the trend. With the double doji, both dojis need to be above the T line? Well, in this case, let's say this case, Santa, you can see what happened. They never closed back below the T line. Now, sometimes they'll do it where they close just below the T line, but if they do a doji just below the T line, what's that tell you about the strength of the selling? It was pretty indecisive. So what do we look for the next day? The price will usually move in the direction of how they open after the doji. Overbought for a downtrend, yes. A pattern setup. If I got out of this trade right here, I'm looking for a pattern setup to tell me, oh, they've held the T line, it's doing a J hook. Now, back in the old days, which in my case was a long time ago, if I got out, if I happened to be lucky enough to be in a positive trade, which back then there was no criteria, because I don't think we even had charts back then. I'm talking about back in the 70s and early 80s. If I got out of trade and started going back up, they weren't going to trick me and get me back in and then take it back down again. Well, now at least I can recognize the type of patterns and know what to expect from that pattern. Okay. If that's it, then Jim, go ahead and do the double line. And in 3.7 seconds, do the next double line. KOD, you could buy this one on positive trading. Don't let it close back below the T line. RAPT, same scenario. Kind of your bobble breakout. Watch to see what happens if you're buying when it gets to the 200. RGNX, another bobble breakout. Look for it to go to the 200. Jim, they may have, but they probably didn't have candlestick charts back then. They probably had line charts. That's a nice J-hook pattern. Not a J-hook, but your what I call the support pattern. And the support pattern basically is where you can see where they came up through the resistance, came right back to the support, gapped up. That is a good, effective, high probability trade with the potential heading back up to the 200. ETRN, just stay long. This is kind of your strong signal, your abandoned baby. Gap down and gap back up. That usually indicates a very strong reversal. Clean energy, just stay long. Now you're looking for it to get out through this level. Vidu, stay long, kind of a trend kicker signal. Upstart. Uh-oh. I don't put a J in front of that. Upstart. That's a bobble breakout. That one you can be buying on strength tomorrow. Schwab, you could start going after this, but you want to see what happens here at the 50, breaking that downtrend. But that's those gap ups are telling you there's a change. This one you could be shorting. That gap down, especially right in here, if they start trading this one lower, you could be shorting that one. Net, stay long, use the T line as your stop. Time. ALB needs to get up through the 50. Yep. That's a good, well, if you are long, I don't think you can short this, but definitely do not want to be in it. BBLN, there's that very best friend. You don't want to be in this one either. AI, with that gap up trend kicker signal, now there's lots of running room. Texas Instruments. You could buy this one. You wouldn't be short anymore. Look at your bullish left-right combo. You could be buying this one with the expectation your first target would be the 200. Rambus, stay long. Now you're watching. Look at your kind of your cradle pattern here. Now you're watching to see if they can get up through this level. GEVO. You could be buying this one. Want to see strength confirming this what we call the little stutter step. Came up, pulled back, did a stutter step. Now they're buying again. Royal Caribbean. Another one that's setting up for a J-hook type pattern. QuantumScape came up a little bit today. You don't buy this one until it gets up through the T-line, either for short-term trading or long-term hold. So there's your doji, doji, doji. Now remember what the Japanese rice traders always illustrate for us. Where do most people sell? They panic sell at the bottom. Then you have doji, 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 bullish confirmation. This would be one of those charts where you'd put your Fibonacci retracement numbers on, and I don't know how to do it. Oh, yes, I do. So let's use that point and that point. So where could it move to? Well, here or here or here or here or here. So do we use Fibonacci numbers? No, but we can use them to see what happens at those levels that everybody else might be watching. All right. And CNX, there's your bobble breakout. Won't make a whole lot of money with this, but I'd suspect they're coming back up to test the 200. Is there a sensible way to guide one's how to decide between possible trades? FC, that's hopefully why you took the top rank signals and patterns session a few weeks back. That we know there's good trades and we know there's better trades. So the first thing you want to do, which I hope you've done by this time, FC, is learn the 12 major signals, learn the patterns, and then take the next step up and say, I want to study the top rank signals and patterns, which are things like a doji gap up, your best friend, or a doji gap down. So you're now learning which ones have the strongest force in a direction. And so how do we take advantage of that information to know what to do once that information is revealed? Splunk, kind of expect it to test the moving averages if you're buying. T-Mobile. T-Mobile, nothing real exciting on this one, Kevin. If you like it, it needs to get through the 50. And as you can see, it's just not a real dynamic. It's your basic institutional trader. Yeah, so on our website, you can buy the books much cheaper than you can buy them on Amazon. You can buy the different training videos that we have at a much better discount price as a member. But the most important thing is you don't have to know formulas. You don't have to know percentages. You just have to recognize where a high probability trade setup occurs and then know what to do once that trade or that trend starts. So this is why we're going into all the extra little tidbits of things that you want to be looking at that will kind of enhance reasons to stay in a trade. And this is a very good example right here. Is we can see the pattern, we can see the signals, the double dojis. So we're heading in the right direction. Okay. Unfortunately, this is one of the most boringest markets to trade in a long time. So this is the benefit of candlestick analysis. Tell you when you're in a downtrend. You can tell a pattern, the blue ice failure. You can tell when things are bottoming out in the oversold area. And then you can also tell when things aren't moving any direction. So that changes your trading strategy. Learn, the signals, the patterns, top rank. Your left-right combo, your kicker signal. We did approximately 18 of them. Now, the number one is the best friend signal. But number 18, that doesn't mean that's a bad signal. It just means we've put them in different quantitative order. They're all good. Now, a lot of people can identify easily a fry pan bottom or a J hook or a J hook plus. Some people have problems with that. So there's about 18 that you can look at and say, well, I can recognize a trend kicker signal. I can see that pretty easily. Now I want to learn what that entails or what the expectations are. I was trying to figure out which ones are the best friend signals. And one of them is the bigger the signal, the more compelling there's been a change of investor sentiment. So this is all stuff that you can learn without having to have a sophisticated technical analysis background. All you're learning is what the Japanese rice traders have shown us to be high probability trade setups. From that point, we just want to learn how to use them correctly. Okay, that's about all I got. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.